Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Australia's been assessing their exposure risks to the upcoming Trump tariffs, and they're nervous. But first, in the US, their November CPI rate came in without any surprises. It rose for a second consecutive month to 2.7% in November from 2.6% in October, but the rise is partly influenced by low base effects from last year. Core inflation, that's without food or energy, was stable at 3.3%. Food prices rose 2.4%, and rents jumped 4.7%. Petrol costs fell 8.1%. For the fifth straight week, US mortgage applications rose, and by 5.4% from the week before, driven by a surge in refinancing. Loans for new homes actually fell, and that puts the overall 4% higher than year-ago levels. At the same time, mortgage interest rates dipped, but it was a minor move. Another very well-supported US Treasury 10-year bond auction this morning delivered a median yield of 4.19%, down from 4.29% at the prior equivalent event a month ago. And as expected, the Bank of Canada cut its key interest rate by 50 basis points for a second consecutive time in its December meeting to 3.25%. And that makes 175 basis points of cumulative rate cuts from this cycle's peak at 5%. Still, rhetoric from policymakers suggested there will not be any more outsized rate cuts next year, and officials dropped the statement that borrowing costs are due to be lowered should their base case hold. The interest rate cut followed data showing that the Canadian GDP grew an annualised 1% in the third quarter, below the central bank's projections, and shrank on a per capita basis. And growth in the fourth quarter poses the risk of also missing forecasts. In Japan, producer prices rose 3.7% in November from a year ago, higher than in October, and exceeding market estimates of 3.4%. It was the 45th straight month of producer inflation, marking the highest figure since July 2023. These pressures will eventually show up in consumer prices, and that in turn will encourage the Bank of Japan to raise its 0.25% policy rate. They will next review it on Thursday, December the 19th, when a 25 basis point rise is anticipated by financial markets. In China, Reuters is reporting that officials are open to let the value of the yuan slide in 2025 as a way to push back against the expected Trump tariffs. In Malaysia, retail sales rose 7.1% in October from the same month a year ago, rising from a 5.5% rise the previous month. It was the strongest growth in retail sales there since June. Malaysian CPI inflation is only running at 1.9%. In Australia, their policymakers have been reviewing their risks from the upcoming Trump tariffs. They found direct risks were low, in fact very low, but indirect risks were unusually high, and cited some startling analysis by the Bank of International Settlements. The more China is affected, the more Australia is. The US Treasury 10-year yield is now just on 4.24%, unchanged from this time yesterday. And the price of gold will start today at $2,713 an ounce, up another $20 from yesterday and a 2-week high. And oil prices are 50 US cents firmer at just under $70 a barrel in the US, while the international Brent price is unchanged at just on $72.50 a barrel. Meanwhile, OPEC has cut its forecast for global oil demand growth in both 2024 and 2025. And the Kiwi dollar starts today at just under 58 US cents again, and unchanged from this time yesterday. Against the Aussie, we're down 10 basis points at 90.9 Australian cents. Against the euro, we're unchanged at 55.2 euro cents. That all means our trade-weighted index starts today at just over 67.8, to be down 10 basis points from yesterday. And the Bitcoin price starts today at $100,588 and up 6% from this time yesterday. Volatility over the past 24 hours has been high at just on plus or minus 3.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.